Okay, this is the daily money-making setups on the S&P E-mini for June 8th using the 1500 tick bar chart. This is the processtrading.com right edge trading system. And just to go over that quickly, there's two halves to the screen. The upper half where you're going to be doing trend trades and counter trend trades, and then the bottom half where you're going to be doing discretionary trades with the discretionary indicators. In the top half of the screen, you have the process trading VWAP, and it's either colored yellow or gray. If it's yellow, you can take trades to the uptrend, and if it's gray, you can take trades to the downtrend that are coordinated with these timing alert dots. So if you're going to take a trend trade to the upside, the process trading VWAP has to be yellow, and the timing alert dot has to be below the price bar. Also in the top portion of the screen, you have the contrabands. That's this band here and this band here that are the areas in which you can take a contrarian trade, which should be taken according to the trade management system of processtrading.com. Also in the top half of the screen here, you see a dashed line here. This is a stop exit line for discretionary trades. So we actually won't be getting into that much today because this is a trending day. So you can take trend trades, and that's what we're going to see here. Now, the process trading VWAP, which is an element of taking trend trades, as we just discussed, also acts as a support and resistance line. And it also acts as a regression to the mean line. So when it acts as a regression to the mean line, where would price regress to the mean from? Well, it would regress to the mean from a contrarian position. Ultimately, price will go up to the contrarian bands or past them, and then it will regress to the mean, which would be the VWAP line. So in today's trading, we can see that it acted not only as a trend trading element, but very much as a support element. Here's the day that started out over here, and price was not going below the support line. It came down here to the support line, went back up, came back down to support, went back up, came back down to support, and when it couldn't break through that, then it takes off to the upside. So we're going to review those trend trades in just a second here. And when we do that, that's all the information we need to take those trades and trade them effectively, as long as we trade them according to the trade management rules for trend trades on the right edge system of processtrading.com. But when we take those trades, we would assume that the discretionary indicators would show us that they would be in agreement with that decision. The discretionary indicators on the bottom half of the screen for taking discretionary trades are the Intergy indicator, which stands for internal energy, and it has green bars which show demand, red bars which show supply, and then gray bars either within the supply or demand areas that show weakness. When the gray bars come in, that shows weakness in price. The normal configuration of the Entergy histogram is that they'll go in peaks and valleys and peaks and valleys and peaks and valleys. You can see those here. They'll also do that when this is an uptrend, but they'll also do that in a downtrend, but the peaks and valleys will be with the supply side. Now, these peaks and valleys are a proxy for volume. They're not a one-to-one proxy for volume, but when you think of price and volume together, consider that the volume starts out with buyers coming in, and you can see the amount of buying taking place here, and it goes up to an apex. At some point, the buying has to start lessening or even getting exhausted, and that's when weakness comes in, and these gray bars will show you those points. So that's why it forms these peaks and valleys. That's why it's a better proxy for volume, because volume, although this shows you the internal energy behind that volume, it also shows you when it rises to its peak and weakness starts coming in. Then below that is the sentiment oscillator, which has the momentum line, which can be in an overbought red condition or oversold green condition, or just a normal white condition here. So it's the momentum is this tricolored line within the oscillator, and the oscillator, of course, has the upper and lower boundaries and then a midline set to it. So the sentiment line within the sentiment oscillator is this dashed line. Anywhere the momentum cuts through the sentiment line, that's a strong indication the price will actually follow that as well. So you want to coordinate that with the energy with the price. Now, within the sentiment oscillator, the structure or the placement of the sentiment line, as well as the slope of it within the oscillator, is also very useful information. As you see here, this was a trending day, and price didn't break support, and it just and eventually trended upwards. Well, we see the sentiment line, which would be the psychological factor, the conviction factor behind price going up, structurally never went below the median in this oscillator. So it tells you that this sentiment is really strong to the buy side. And then down here, we have the short-term trend oscillator. The short-term trend oscillator does several things. One, it has boundaries, an upper bound and a lower bound, and you can see that here, but you can see the boundaries start to narrow very much here. Well, that tells you that the volatility is lessening right in that area. So right in here, even though you're reading price as a normal price pattern, you know that the volatility is less actually than it was over here. So from here to here, as price goes up, meets support, goes up, meets support, goes up, meets support, they are really jockeying for position and accumulating either buy orders or sell orders. Well, we know that the sentiment is to the upside here. So we would be expecting it to, if it's going to break out of that it would probably break to the upside. We also see in the energy that there's very little supply that comes in. It's demand and then weakness to demand and then more demand. And then weakness to that demand, some time elapses, and then more demand comes in. During these times, during the weakness times, it's a time where if there was going to be selling, this is when it would occur. If it doesn't occur in there, then the buyers step in again. In your short-term trend oscillator, we can see that it has another line within it, and this is called the pullback line. And it works exactly like it's actually graphically demonstrated right here. Price went up, and then it came back down to the VWAP, and it couldn't break through it. Is it going to break through it? Well, one of the ways that we would determine that and try to make decisions on that is that price is right here at the pullback line. So the case often occurs that it will hit the pullback line and react just exactly like the line is defined as. It hits it and it pulls back and then it continues on. Just exactly what here. It came back, it pulled back, and then continued on. We also know that to be the case because when we look at price, we see professional bars. That's these blue bars down here. The yellow bars are the less skilled traders. The blue bars are the professional bars, and the green and the red bars are everybody else, whether it's algorithm trading or institutional trading or market makers. It's everybody else. But you also have identified the professionals and the less skilled traders. So in this case, the professionals took it down right down to support. And do we think that they're going to take it down later? Well, no, because we got a price alert dot right here, plus prices at the pullback line, which gives it significant impetus to bounce off of that and go back up. The supply was very weak, and the momentum is crossing up through the lower bound and eventually cutting through the sentiment line, which stayed in the upper half of the indicator. So we know that the professional bars coming down here at this point, we're just shaking out any amateur or any less skilled traders, which is kind of indicated by this yellow bar right here. This is the less skilled traders thinking the price is going to continue down. And then they caught of it, and then this is where they are getting shaken out. So at any rate, none of this do we really have to know to take our trend trades. That's the beauty of this. The beauty of the right edge system is that it takes the emotions out of trading. It takes the uncertainty and poor decision making significantly out of the trading process. So since we have a yellow VWAP, we can take a trend trade to the upside. So we can take a long trade when we find a timing alert dot that is below the price bar. Well, here's the timing alert dot. It's below the price bar. So the trade management technique for process trading on trend trades is that we want to buy into strength and sell into weakness. In this case, we're going to be buying into strength. So right here, we look at the high of this, which is at 27.65. So we place our order at 27.67. We place our order 2 points above the high of the bar with the timing alert dot when we're taking a trade to the long side. 27.67 would have got us in on this bar right here. So we got in at 27.67. The top of this bar would be 3 points. So if you're looking to take 1, 2, or 3 points, you can get that right here. Otherwise, if you just stay in the trade, you come up, it pulls back a little bit, it comes right up here, and you can be reading the discretionary indicators as well to help you stay into the trade, because you'll know when demand is coming in, you'll know where the conviction to the trend stands, and you'll know the strength of the trend with the short-term trend oscillator. So it comes back down to here. Now, this low is 65.50. So that is a 1.5 below where we got in. We got in over here, right here, and this is a 1.5 below had you stayed in it. Well, whether you stayed in it or you didn't stay in it, here's another timing alert dot right here. So you could put on a second contract here, or you could just, if you took your 3 points over here, you could just get in again, or you could have waited, and this would be the first time you get in. So when we get in here, we look to the high, because we're going to use our trade management technique, which is 67.75. So we have to get in at 69.75. Right there, that's going to get us in right here at 69.75. Now, we would take this all the way up to when this professional bar gets a timing alert dot on the contrarian band right there. So the high of that is 76.25. So that's 6 3/4 points. From where we got in right here up to here is 6 3/4 points. So 6 3/4 points. If you got out here with 3 points, that'd be 9 3/4 points. You would get out here for 2 reasons. One, that the trend had went up to the contrarian trade line or the contraband. It also shows a professional bar that comes down below the stop exit line. That's what it's for. When you get that, you exit. So it tells you when to get in, and it tells you when to get out, and then you would have taken the heart of that system. Let's say you only made 5.5 points. I'm not sure where that's at right now. We could look, but the point of it is you can make 4, 5, 5.5 points very safely, and this would tell you to exit here. Well, that would be a good exit, even though price did go back up a little bit right here. Ultimately, it came down to here. So that's how the trend trading works. That's how the contraband lines are used. As a matter of fact, you could have taken this as a contrarian trade right here. And as a contrarian trade, it has to meet certain criteria. In other words, the high of the price bar with a timing alert dot has to be lower than the high of the previous bar. Then you set your stop exit a half a point above the high of the previous bar. And you also enter into this trade as soon as possible. So let's say you did that, and the high of that is 76.25, and the low is 74.50. So let's say you got in at 75. You got in as soon as possible. You didn't get in at the high at 76.50. You got in at 75. And then you took it down to here, which the low of this is 71.50. So now you've got another 3.5 points. But I mean, the point here is you're selling into weakness. You know there's going to be some weakness because this is a professional bar going to the downside. Then you can take 2 or 3 points out of here. Also, on the contraband line, at this point, you had a blue portion of the PT VWAP line. Yet a portion of it is blue. So the way you read the colors is that the yellow is a normal VWAP price action. The green is that price is somewhat extended. And the blue is that price is somewhat overextended. So when we want to take a contrarian position to the downside, we would like to see this blue occurring, which it did occur just before the professional bar came in to the downside. So at any rate, that's it for the money-making setups for June 8th, which was Friday. So you could have got in here, you could have got in here, and you could have went contrarian here. You know, take the guesswork out of it, have a system, follow the system, and try to remove the emotional part of the trading out. So that's it for the money-making setups for June 8th. If you want to see them on a daily basis, you can hit subscribe. And if you want to see how the whole system works, then just go over to processtrading.com, and there's lots of blogs and videos and documentation and other good data over there. And at the bottom on processtrading.com, there's a contact form if you want to leave a comment or a question, and we will get back to you. So I hope that helps, and we will see you on the next video.